Well, they're fairly bullish now again.
Yeah, that's right, Sherry. When you take a look at what local fund managers are seeing, they actually expect a key benchmark, the Sensex, to end the year high. We did see it reaching an all-time high back in January. And when you take a look at this terminal chart, if you bring it up, you can see we are actually heading back into that direction again. This is really down to strong domestic demand that's expected to boost corporate earnings. In terms of what else we're seeing, though, overseas funds, they're also starting to come back into the equity market there. It is worth around $3.1 trillion, so a sizable one to be investing in. But essentially what some investors are saying here is don't treat the Adani issue as something that is emblematic for the entire Indian stock market, because these are actually two separate areas. And the governance standards of many Indian companies are on a par of what we see globally, and also having any sort of governance issues isn't something as well that is just intrinsic to what happens in India. Now, the slump that we've seen so far in Adani companies, we're looking at losses of north of $130 billion, but this could end up not being a stumbling block either for Indian stocks, because it's interesting what you hear from international investors, the likes of Mark Mobius, saying that actually the Hindenburg research report could have had an unintended side effect here, and that is that it's given more exposure to the Adani stock market to international investors, and he's actually become more bullish now as a result. And so he's actually looking to buy technology, infrastructure, healthcare stocks as some of his picks, Heidi.
Yeah, the Adani crisis has been a real wake-up call for ESG investors. It's just another kind of way that we've been looking at this crisis.
Yeah, this is sort of the flip side of the issue here. You do have that investment story, the investment thesis, but the real issue comes to when you look at the collateral web for companies in the Adani Group, because this presents the real headache for any sort of ESG investor out there. Norway's largest pension fund, this is KLP. It's probably a good example of this because it was recently forced to dump its entire holding of shares in Adani Green Energy, and that is the renewables part of the empire. And the concern there was that it could have actually inadvertently helped to finance some of the world's most polluting activities via the state, because in a February 10 public filing, it was made clear that Adani is using its stock from its green companies as collateral in a credit facility that it's actually helping to finance a big coal project in Australia, the Carmichael coal mine. So this is a real issue here for ESG investors, and we did have some Bloomberg research saying that actually 500 so-called ESG funds in Europe actually do have exposure to Adani Group activities in one way or another. And that is also saying it's coming into the MSCI as well, because they've given Adani Green a rating of A. It's something that they've said they're going to have to be looking at, Heidi, a lot more closely.